the All Funds Investment Podcast explores those making investments in the alternative asset landscape, as well as the vendors who service these funds. We provide resources for emerging managers and insights for those in the alternative fund space. This podcast is for informational purposes only and should not be relied upon for investment decisions.
Welcome to the All Fund Investment Podcast. My name is Mike Schroeder. Today we're here with Quentin Thom of Perform Due Diligence Services Limited. Quentin, welcome.
Hi there, Mike. Thanks for having me. Great to see you.
Absolutely. Thanks for joining us. To start off the conversation, would you mind just giving us a little bit about your background and the story of how you came to start Perform DD?
Yeah, sure. Thanks, Mike. A long background in the world of operational due diligence specifically. I actually met the co-founder of Perform, James Newman, back in 2008. He was running a fund of funds here in London, and I was actually running a firm that was helping award operational certifications to hedge funds, and I was their London MD. James and I met during that time. He was busy reviewing hedge funds and private equity funds. He was, vetoing Madoff, and I was kind of busy working with some of the world's largest hedge funds. And we became friends and peers, and we all set out on a journey of maybe one day we would go into business together. He then went on to take the role eventually of Global Head of Operational Due Diligence at Barclays Wealth, a role sort of well understood to be one of the most sort of prestigious in the space, largest team, a huge portfolio of investments, global reach. Meanwhile, I actually went into investment banking for 5 years and actually joined Deutsche Bank on the prime brokerage side, running a consulting team. And strangely, even then, James and I were overlapping because my job was to launch and incubate and emerge hedge funds for the bank as prospects of the bank, with the hope that eventually, if they were successful, they would choose Deutsche Bank as one of their financing counterparties. And in that job, I was tending to get hedge funds and investment managers ready for operational due diligence. So bizarrely, I was getting them ready for people like James to review them in his role. And so we continued to sort of constantly meet in our worlds, and we became increasingly compelled that there needed to be a new, innovative and highly flexible operational due diligence business out there. It needed to be headquartered in the UK because there wasn't one, and it needed to liberate ODD services. So it meant that it needed to be truly pan asset class, long only, hedge funds, private markets, and importantly, crypto and digital. It needed to be able to make itself available to both investors in these organizations and these funds, and actually the investment managers themselves, and indeed the service providers. So we knew we were going to have to be very lateral, very broad, and we hatched our plan and launched our business, Perform Due Diligence Services, in November 2019. After 2 years of incubation, through the challenging time of pandemic and otherwise, we effectively took a Series A type investment from a FTSE 250 PLC, JTC Group. And by doing that, we became a group subsidiary company of theirs in October 2021. A hugely exciting moment for us because after just 2 years of being in business, we were able to further grow our team and our client base. As we speak today, we're 8 people. We're about to be 9. Offices here in London, although we're decentralized. We're here as people in London, UK, and Switzerland, and we'll be shortly hiring in the US. But it is very much a virtual ODD service, so our clients and our reach is truly global in the work we do. We're delighted to be part of JTC Group, and as a result of that, we get the investment and the support of a billion market cap, 1,500 person, 20 office organization that's very popular and successful in private office services, fund administration, and other trust services. So you join us, I'm delighted to be speaking to you because we're chatting at an extraordinary point in our journey with huge client onboarding over the last 10 months or so.
Yeah, that makes a lot of sense. I'm sure you guys are seeing a lot of action right now, especially the crypto space with everything happening. So tell us about your services that you offer, Perform DD. What type of clients do you guys work with, and what's your full list of services?
Yeah, and let's drill now into crypto and digital assets, because the other side of our business, whilst important, I think is not so much the focus of today. So the suite of services are as follows: investor into crypto funds and managers. Typically in our world, it's been fund of funds, fund of crypto funds. It's been more broad fund of funds that are looking to launch a crypto product within their group. And the first offering is what we call allocator on demand operational due diligence. Now, a lot of these groups don't have a huge amount of in-house resource. They are increasingly hiring these resources, but often they don't really have any in-house resource. So Perform becomes that on-demand solution as they try to build out their portfolio of underlying investment managers. Often it's between 10 and 20 individual investment managers and funds. And our job is to go out and perform operational due diligence at the manager and the fund level on their behalf, and deliver operational due diligence reports to them in a timely fashion to enable them to help make an investment decision safely and robustly. We tend to work in line with when their hoped subscriptions would be. So we're always listening to our client. All being well, when are you looking to invest? All being well, which fund product are you looking to invest? Are you looking to invest in perhaps a fund of one, a managed account, or a commingled fund, or whatever it might be? So that's the core of our service. We've been extraordinarily busy with that. We have a very, very large number of investors who fall into that category, and we were very much the first to offer it. So now we enjoy the fact that many of our clients ask for the same names, and that creates efficiency for us, because rather than going to do the work again, we can say to our client, well, good news is we've actually already got a June or a July dated report on that particular investment manager. You're a Perform client, so we can provide you a copy of that report instantly at a vastly reduced resale fee. So that's service number one. Service number two starts to become a bit more innovative, which is what we call operational due diligence therapy, and has been enormously popular with emerging and new launch crypto managers, whether it's CeFi, DeFi, or otherwise. We're agnostic to strategies and instruments. ODD therapy is kind of, I hope it sort of is what it sounds like it is. It's spending time directly with the investment manager on their money. So it's them hiring us, not an investor hiring us. It's the manager saying, okay, I think some of my management fee or my seed investment or my working capital should be spent on getting somebody to work with me and identify what are going to be problems in the eventuality of someone like Perform then coming and doing a review for them. So I kind of compare it to like having an educational tutor for your child who's trying to get through an important milestone exam in their life. Often that educational tutor that you hire privately and directly is actually often a teacher who actually understands the curriculum and has worked in schools or colleges or universities. And so we're a bit like that. We're always helping people in the mindset of, well, we do this for a living. This is our job. So these are the things that we would expect for the standard of operational due diligence which we perform, which we mark at the very institutional level. So if you get through Perform operational due diligence, and we'll talk about what getting through means in a minute, you really are getting through what the most institutional level of operational due diligence scrutiny would be. ODD therapy is really interactive. It's high impact. It's role play. It's stopping, starting. It's remediation programs. It's getting somebody in shape. It's a bit like going to the gym and being a personal trainer, and you very quickly see where they just have zero strength or they're struggling with some injury, and you can really help them strengthen themselves and prepare themselves. I mean, a lot of what we do is even down to communication and articulation and understanding even what ODD is. Fundamentally, if the target of ODD understands what ODD is, straight away there's going to be a more elegant and harmonious relationship between investor and investment manager. we've seen over our vast years of doing ODD as a team in various different forms, there's often been a bit of a tension between investor and investment manager when it comes to ODD. Misinformation, sort of slightly strange reactions, information not being quite sort of delivered in a timely way, irritation, frustration, a sense of repeating, all these things we kind of set out to try and resolve. So that's ODD therapy. And something that we, as I said, we really enjoy doing. We find it incredibly rewarding. Next service is service provider operational due diligence, or virtual asset service provider, as the case may be. VASP being that definition that FATFA came up with, but actually just think of it as any service provider, fund administrator, custodian, exchange, lender, doesn't really matter who it is. We offer a service to help investment managers appoint those providers, and typically they get to a stage where actually it'd be really useful to have some sense of assurance around who they're actually going to be working with. We've had examples of this from established investment managers in wider strategies who are looking to launch crypto fund products, so not emerging managers, and just realizing that by introducing a whole new suite of service providers that haven't been known to them before requires ODD. For investment managers, emerging investment managers, these are quite big decisions. So performing ODD on your choice of fund administrator, for example, is quite a big one. And I'm sure you're sensitive to that given your background in the space. So that is element number 3. And then maybe I'll stop there for a moment because I would like to talk about our exciting new product for investment managers that's literally out today, but perhaps we'll talk about that momentarily.
Yeah, please do. Very interested to hear about it.
Okay, well let's touch upon that. So we felt that what I've just described has been work we've been doing relentlessly. 50 reviews across investment managers, service providers, and VASPs. And all the work we do beyond, and we've learned stuff from that. And one of the things that I've learned is that particularly in the crypto space and the digital space, investment managers deserve to have a more collaborative operational due diligence experience. It's just not as established a ecosystem yet. And whilst this ecosystem really builds up strength and multi-year track records and experience with service providers and everything that goes with that, we think there should be a operational due diligence solution that supports and enables all of this. So what is that? Well, we call it an ODD report solution. So it doesn't matter whether you're an investment manager, a service provider, or a VASP, you can now commission Perform to work with you directly. And we will perform our operational due diligence review, our work. And in this instance, you actually get to see the report, which you never do when we're working on behalf of an investor. That's super important to mitigate all those things that I just mentioned earlier. Once you get to see the report, we will allow the investment manager, as the case may be, to actually review our report for factual accuracy. They can't change the contents of the report, and there's always going to be constructive criticism, strengths, weaknesses. We don't do pass or fails, but we arm the reader with very robust information to be able to make an informed decision. But we'll allow the investment manager to check it for factual accuracy before finalizing. Once the report's finalized, that's an industry first in itself. Once the report's finalized, we will give the investment manager, the VASP or the service provider, a password. And we'll say, right, you can now give that password to whomever you want. It's up to you now. We won't distribute it. It's up to you. We'll announce on our bulletin that there's a Perform ODD report, but it's up to you to share that with whom you feel is relevant, clients or prospects or otherwise. Those you give it to will put that password into a Perform portal, which will then micromanage behavior and ultimately spit out a copy of the report to them free of charge. So it'll be this wonderful efficiency moment in the industry where the investment manager gets the benefit of seeing what's being written about them without doctoring it, going through a collaborative experience that builds in things like ODD therapy. And then you've got a third party effectively writing documentaries on these organizations. And we're going to do it each year at a minimum. It'll have to be renewed each year, but we will happily do it more often than that. We are being asked to do it more often than that. But at a minimum each year, new report, new password, and we become part of the journey of growth. And it's fundamental to understand that ODDers always want to see organizations that are demonstrating a willingness to improve and accepting where they have weaknesses. Too often people think that there's a lot of too many red lines, but actually we take a sympathetic and an empathetic approach to this space and actually say being aware of what your ailments are and having a willingness to do something about it is really what's important. So that's a super exciting moment for us. Our first client is underway, and we expect a good community next time we speak.
Yeah, that's great. That's awesome. It's I mean, even just for a fund manager to be able to share that with their investors, I could see them getting a lot of value out of that. The investors just being more confident in their decision to make investments.
Exactly.
Now, when it comes to as a hedge fund or VC fund, thinking about going through due diligence services, at what size does it make sense for a fund manager? So maybe somebody's just starting off with $1 million. Do you have to be closer to $10 million, $20 million? I guess what does it look like from your perspective in terms of size of a fund manager to be thinking about this type of stuff?
Well, I think if you're working, the smaller you are, and we've worked with, like, believe it or not, even we did a DeFi review of a manager that was one guy, and so the first thing he did was get ODD therapy. So there is a natural order of things. If you're truly new launch, then I would think ODD therapy is the smartest thing to do, because once you've got that, you can actually start telling your prospective investors that one of the things you did was you went out your way to get some help early on. We can also tell people that when we get asked, have you done ODD therapy with people recently? So I think that's the easy one, and it's been priced in a way to not prohibit small managers who have limited working capital. There absolutely is no threshold for the ODD report solution. In fact, what we've done is we've created renewal cost thresholds based on AUM. So you'll pay your initial fee, and then when you renew, we'll happily align ourselves to the growth of your organization. So the fee will go up subject to what your AUM is, and it would only reach the maximum renewal fee if you're over 100 million AUM, for example. So we help keep we're kind of aligned. But there, that feels to me, what's the difference between a sort of literally a pre-launch, one or two individuals? That's got to be ODD therapy, I would think. What's the difference between that and then considering an ODD report or being subject to our work? Could be as little as like 5 or 6 people, 6 months in. We've done lots of work on investment managers that actually the commissioning client is effectively their cornerstone seed investor. So a lot of it is theoretical, and the work is being done and driven, the ODD is being driven towards the business being able to come alive as a result of that first investment, if that makes sense, or they will be the first investor into the fund product. So you really feel the how people culturally organize themselves when it means that much.
What are some things that funds should be thinking about when it comes to hiring third-party service providers?
Yeah, and do you mean like all of the suite of service providers?
Yeah, this might be an admin, an auditor.
Yeah, I think, as I said, we do dedicated ODD on providers for groups, but I think there are some, if you're trying to sort of look at it more sort of generically, there are things like, how long have they been in business? Who is delivering the services, and what's their experience like in the space? Are they TradFi? Are they native? What's their existing client base, not by name, but what does it look like? Are they working with similar investment managers of similar sizes? Kind of just getting a sense of what their what their experience and also what their appetite is, because many service providers, like so many people in the ecosystem, are wanting to be part of this journey, but to what extent is quite different. So how much of their business is in digital and crypto, and it doesn't matter if that's quite small, if what else they're doing is informing them of a very good way of doing it. But it's always nice to see dedicated providers who are fully engrossed in the space and somehow have managed to gather so many names and clients over quite a short period of time. Clearly, you're going to want to, in an ideal world, you're going to want to see some sort of demonstrations of good practice, which could include our Perform ODD report, as I discussed. That's something we're discussing with many service providers, but it could also be a SOC review, an ISO review. And I have to say, as you get to more consequential service providers for the fund, so from the shareholders in the fund, ultimately, you're probably going to want to be looking at all three of those. But if you're looking to appoint a lawyer, is it entirely necessary that they have a SOC 2 audit controls report? Possibly not. But there'll be other things you can look at, and then all the obvious things like what's their behavior been like in the industry? Have they been subject to anything that, and it can, ironically, of course, it can include lawyers and other groups. Have they had any litigation? Have they had any matters of dispute? It's always worth trying to understand the culture of the organization, because when you speak to service providers, and we know this because when we review investment managers, we're always interviewing the service providers as well. You're often speaking to a representative of the service provider. And as soon as you can get to the person that will actually be servicing you from the service provider, the better. Particularly important in fund administration, because then you can start asking them about their qualifications if they're doing fund accounting and all of those good things, and try to get one layer below perhaps the sort of the headline introductory information, which is incredibly useful. But as I say, understand who will actually be working with you on a day-to-day basis practically.
Yeah, that makes a lot of sense. I think that's something very important for the managers. What could you walk us through, due diligence process for a fund, kind of what it would look like from the lens of an investor who engages with you guys?
Yeah, so typically we have a nice we think we have a nice way of doing it based on our experience. We always ask our commissioning investor to introduce us to the target, to the investment manager. That's the first thing that happens, and that's normal practice. But then things differ, I think, with us. First thing we then do is we have a call with the investment manager, because we think they deserve the courtesy of a call, and it's only polite. And we use that opportunity to actually do a bit of operational due diligence just for that call. But actually the purpose of the call is to introduce Perform. It's to tell them what our process is going to be like and let them answer questions, because for some emerging managers, they might not even know that everything needs to be organized in a data room, and what is the most regular data room to use. So it gives them a chance to us to tell them and prepare them, because we think it's pretty harsh when an investment manager just simply receives a cold faceless email with hundreds and hundreds of questions and demands and a horrific time frame attached to it. We think they should have the opportunity to sort of say, oh, okay, so why were you guys hired? How long is it going to take? And then we use that as an opportunity, as I say, to answer questions about the process. We tell them what the timeline is for our clients, so everyone's on board. We tell them that we're going to need to get in touch with the service provider, so to get on and get that done. We tell them what we're going to want in terms of the kind of documents we would like and how we like to populate our information and how we'll help them with that. So I think we have a nice way of articulating the process. That's usually the start. Then we kind of let them put that information together. Meanwhile, we'll be contacting the service providers, and then starts our process of review, analysis in-house on the Perform side. And then we tend to set up a call with the investment manager, and then we'll start our verification processes and going through procedures, policies and otherwise. All of this, by the way, end to end, from that introductory email to the client getting the report, can be 6 to 8 weeks, sometimes a bit shorter, rarely longer. And everything tends to happen quite promptly in a business like Perform. So the introduction happens, the phone call happens the same week. We'll be getting on with our review by the end of the week. There's no months or month delay here. We believe in momentum and support, and then we're giving updates every week to our clients. Say, oh yeah, we got our references back from the from the service providers. We've kicked off the background checks. We've got all the documents. They're going to come back to us with their finalized DDQ. Some people at the very emerging level don't even have a DDQ. Some of their documents are drafted. So again, we try to give appropriate assurance as to, okay, well, what have you got? What can we work with? And let's make sure that we can steer you in the most sort of sensible way. And then tends to be video calls for going through processes and procedures with a number of people in the organizations, CCOs, COOs, CEOs. We like to speak to as many people as possible. If it's quite a small firm, we'll try and speak to everyone. Increasingly, it tends to be a virtual, regardless of pandemic. This work overwhelmingly is virtual, and we feel that everyone can get comfort and efficiency out of the information. In fact, things are bizarrely much more transparent in a virtual process because of the information sharing through data rooms and otherwise. And that's the journey for us, and
makes a lot of sense. And in terms of, is there any, kind of, especially when it comes to like digital assets, is there any specific areas that investors are concerned with? Maybe that's, custody, obviously admin's a big thing. Any areas in particular for the investor side?
Yeah, I mean, I'm not, I'm not sure about in particular, but there's certainly a suite of things that, investment managers should take sort of comfort in knowing that many of them suffer from the same, deficiencies is probably a bit harsh, but operational imperfections that need work. It's quite common. Key man risk, asset safety, wire transfer controls, IT arrangements, policies and procedures. Bizarrely, it's fund governance and independent oversight. Service providers. There's these sort of age-old things that we see time and time again, which bizarrely aren't actually that much different to hedge funds back in the 2000s. It's a similar set of challenges that sort of almost like they're almost like logical, really. If you think about it, for a new business, of course you're going to find it challenging to have an incredibly robust set of policies and procedures, a BC plan, an incredible IT setup. Understand, if you're in DeFi, understanding all of the sort of protocol risks with smart maybe it's that kind of stuff you would want to see. But policies, PA trading, as I said, infrastructure, valuation, all this kind of stuff is, there's no question, generally speaking, our work reveals a collage of strengths and, let's call them, weaknesses when we do our work. And the idea is not at the end of that to say, and as a result, it's a massive fail and get the hell out of it. It's not that at all. It's just there are there are a number of things that need to be considered and probably addressed in a timely manner. And some of those things can be addressed if they're, depending on the range of severity, they could be addressed even through a side letter. Others can be addressed through a sort of agreed remediation plan, which can then be verified at a point in future. It's certainly quite consistent. But yeah, you can imagine, asset safety and security, given the sort of the industry level noise around those sorts of things, is quite high on the agenda, and the nature of custody. Key man risk for sure, and even things like financial stability. You know, what's your break? You know, you talked about when to engage people like us, but I mean, if you're an investment manager, when's even your when's your break even, and what is that driven by? Because perhaps as an investment manager, you're also quite a decentralized, highly efficient business. So break even might be different to your typical IM, but there will be a break even
Right.
AUM.
And I mean, if you're underwater too, the employees trying to keep them around
Yeah.
might be a little more difficult.
There's always been quite a lot of audit, you know, influence to operational due diligence. So, you know, it's quite influenced by audit. So financial, you know, often they don't exist, of course. Audited fund financial statements wouldn't necessarily be there, but clearly you're going to want to see them when you can, as say financial stability, you know, any of the NAV side of things in relationship with fund administrators. That can be quite challenging in this space. It's not as, because of the nature of the asset class, it's perhaps not as straightforward as just fund administrator independently pricing level one exchange traded equity. You know, it's just not, there's just more to it now. And segregation of duties. I mean, the list goes on. I could speak for hours, but you know, all our positive growth things of our industry, and culturally, there's a real sense of willingness to improve, willingness to grow, willingness to develop, which is, as said, so important to the ODD in an industry to see that.
Yeah, that's great. I think you just gave, you know, a lot of fund managers a lot of things to think about, you know, when it comes to going through some of these investor due diligence questions. What advice would you give to a new fund manager entering the market?
I would say be extremely organized and transparent in everything you do, and try and build an organization. That organization sounds too grandeur. Build a business, build something that kind of second guesses what your investor, what Perform would like to see. You know, start thinking about that right at the beginning of your journey, and have brave ambitions to be a best in class institutional ready business, and not feel intimidated by that, and don't feel that through working capital or other means that you need to make sometimes regrettable decisions for quick fixes, and try to calm speed to market, and temper that against making smart operational decisions, which will just get the building blocks right, because changing down the line can be quite difficult, and lead to all sorts of challenges in explanation. You know, so try and make long-term decisions if you can. You know, and look around, see what other people are doing. Join you know, trade associations. You know, read content. You know, make sure you're on our bulletin. You read stuff like this. That would, you know, you listen to stuff like this. Be active in the community. I've seen that in other asset classes where they have a really close knit, sort of almost kind of unofficial place where you can go and ask questions of all the other COOs in your industry. It's got nothing about competing. It's just like, how did you deal with that? And they're quite good networks. So I think a lot of that is sensible, and just really understanding the, you know, especially in this space, really understanding the operational risks of what you're doing, beyond the running of the business, actually at the strategy and the fund level. And that will even come down to fund structure. Is the fund structure you've got actually right for the asset class and the portfolio and the strategy that you're actually running? Is it truly right? And as I say, just trying to get your rudiments spot on is a smart thing to do.
Yeah, definitely. Q, this has been amazing. Thank you so much. Where could people go to connect with you and to learn more about Perform Due Diligence?
Yeah, thank you, Mike. We have a website, performDD.com. We're pretty prolific on LinkedIn and have a LinkedIn group, Perform Due Diligence Services. I'm on Telegram, at Q Replicant Saint. You've got my email, firstname.lastname @performDD.com, and yeah, easy to track down, and always very happy to speak to any of your listeners and just answer questions informally or otherwise. Thank you for having me on today, Mike. An absolute pleasure.
Absolutely. Thank you so much, Q.